Hey everyone, welcome back. We're diving into a listener question today about monetary systems
Yeah.
and how interest rates would work under
Yeah.
two specific ones, the gold standard and the Bitcoin standard.
It's a great question. It really gets at the heart of how we think about money
Yeah.
and who gets to control it.
Okay, so let's start with the gold standard. I vaguely remember this from history class, but honestly, it always seemed kind of theoretical.
Sure.
Can you break it down for us? How did it actually work?
Okay, so imagine this. Every dollar or any unit of currency
Okay.
is directly backed by a fixed amount of gold.
So you could
So theoretically,
yeah,
you could walk into a bank, hand over your paper money,
right.
and walk out with actual gold.
Oh, wow.
That direct link between the currency and gold is what made the whole system tick.
So it's like a built-in guarantee, right? Your money is always worth
Exactly.
something real.
Something tangible. Exactly.
That's pretty cool.
Yeah. The idea was to create stability,
Right.
limit inflation, because governments
Right.
couldn't just print money willy-nilly.
Right.
They were limited by
They had to have the gold to back it up.
exactly the
Yeah.
gold reserves. Yeah.
Okay. I get that part. But you also said that the gold standard could actually hold back economic growth.
Yeah. So picture this. The economy's booming, businesses want to expand. People need loans,
Right.
but there's only so much gold to go around.
Ah.
If there isn't enough gold to back those new loans,
It's a bottleneck.
it's like trying to run a race with your feet tied together.
Yeah, that makes sense. Are there any historical examples of that happening?
Oh, yeah. The late 1800s in the U.S. is a classic example. Rapid industrialization,
Right.
population growth, putting a strain on the gold supply.
So even though there was all this opportunity,
Exactly.
the system couldn't keep up.
Couldn't keep pace. Yeah.
Okay, and what about those external shocks you mentioned? Like, what happens if someone discovers a massive gold mine?
Well, that actually happened. Think about the gold rushes in California and South Africa.
Oh, right.
Suddenly, there's way more gold in circulation,
More money to print.
which can lead to inflation. Prices go up.
Wow. So even gold, which seems so stable, can actually be really unpredictable
Exactly. And then there's the issue of government control.
or lack of control
Under the gold standard, central banks couldn't just manipulate interest rates.
to smooth things out.
Right. They couldn't just lower rates to stimulate lending or print more money during a recession.
Their hands were tied.
Exactly.
Oh.
Limited by those gold reserves.
So if a recession hit, they couldn't really do much to help.
Yeah, and some economists argue that this inflexibility actually made the Great Depression worse.
Really?
Countries that abandoned the gold standard earlier tended to recover faster.
Huh. That's fascinating. Okay, I think I'm starting to see the gold standard's pros and cons.
Good.
Now let's talk about Bitcoin.
Okay.
This one feels even more out there because it's completely digital.
Yeah, this is where things get really interesting.
So what would a Bitcoin standard world actually look like?
Imagine a world where no single government or central bank controls the currency. Instead, it's all run by a decentralized network, a blockchain, with a fixed supply of 21 million Bitcoins.
So no more Federal Reserve making decisions?
Exactly.
Wow. But then how do we even figure out the value of things if there's no one setting interest rates?
That's the key question. In a Bitcoin standard world, interest rates would be set by the market.
Like supply and demand?
Exactly. Borrowers and lenders interacting directly, cutting out the traditional middlemen.
So no more banks.
Potentially.
Yeah.
That's a radical idea.
That is wild. Okay, but I gotta ask. Bitcoin is famous for being super volatile.
Right.
One day it's up, the next it's crashing. How can we build a stable system on something like that?
That's the million-dollar question, and it's a big challenge for Bitcoin proponents.
Yeah, because if you're trying to buy a house or start a business.
You need some predictability.
Exactly. And how do you even plan for the future when the value of your money could swing so dramatically?
Those are valid concerns, and they're at the heart of the debate about Bitcoin's viability as a monetary standard.
It feels like a huge gamble.
It's definitely a leap of faith.
And what about security? We hear about all these crypto hacks and people losing their savings.
Right, that's another big concern. The technology behind Bitcoin, the blockchain, is incredibly secure.
Okay.
But the systems built on top of it, like exchanges and wallets,
Are still vulnerable.
those are still points of vulnerability.
It's like saying the internet is safe, but your computer can still get a virus.
Exactly. The technology is one thing, but human error and bad actors can always find ways to exploit the system.
Okay, so we've laid out the basics of both the gold standard and the Bitcoin standard. Both have their pluses and minuses.
And we've only scratched the surface. There's so many other factors to consider.
It's definitely not a simple choice.
Absolutely not. We're talking about totally different ways of thinking about money value and the role of government.
And those are choices with real-world consequences for everyone.
For everyone, yeah.
Okay, so let's get back to the listener's question. How would interest rates actually work in these two very different worlds?
That's what we're going to dive into next. We'll look at the specific mechanisms and explore what they might mean for people, businesses, the whole economy.
This is getting really interesting. I can't wait to dig deeper.
Okay.
So we're back talking about interest rates under the gold and Bitcoin standards. Last time we touched on how volatile both systems could be, but how would that actually play out for everyday people, like when it comes to interest rates?
Right. It's one thing to talk about supply and demand, but it's another to think about how it affects you when you're trying to buy a house or start a business.
Exactly. So let's say I'm living in a gold standard world and I want to take out a loan to start a business.
Okay.
What would determine the interest rate I have to pay?
Well, remember, the amount of gold available basically sets the limit for how much money there is. So if everyone's trying to borrow gold-backed currency at the same time, that demand drives interest rates up.
Because there's not enough to go around.
Exactly. Limited supply, high demand equals higher prices. It's basic economics.
Okay, that makes sense. But wouldn't that make it really hard for new businesses to get started?
It could. And that's one of the main criticisms of the gold standard.
Because if interest rates are super high,
It discourages investment. It can stifle innovation, especially for people who don't already have a lot of money.
it's kind of ironic because the gold standard is supposed to be about stability.
Right.
But this sounds pretty unstable for the average person.
Yeah, there's definitely a trade-off there. So what about the Bitcoin standard? Would it be the same story?
Well, Bitcoin's even more volatile, right?
Oh, yeah, much more.
So how would that affect things?
Imagine trying to get a mortgage when the value of Bitcoin is going up and down like crazy.
Oh my gosh, that sounds terrifying. How would you even calculate the payments if the currency backing the loan could drop 20% overnight?
It would be a nightmare, honestly.
Yeah.
It would be incredibly risky for both the borrower and the lender.
And wouldn't all that uncertainty lead to crazy interest rates?
Absolutely. Let's say something happens that causes a sudden spike in demand for Bitcoin.
Like a global crisis or something.
Exactly. People would be scrambling to get their hands on it. They'd be willing to pay a premium to borrow it.
Which would drive up interest rates even more.
Exactly. It could create this crazy feedback loop where the rising price of Bitcoin just fuels more demand and pushes rates higher and higher.
I'm starting to see why people are so worried about a Bitcoin standard. It sounds like it could really destabilize things.
And it's not just about borrowing. Think about trying to run a business where your income, your expenses, your employees' salaries are all in Bitcoin.
Oh, wow. Yeah.
It would be impossible to plan for the future.
Right.
You'd be constantly trying to adjust to these wild price swings.
Businesses need some level of predictability to survive.
Exactly. And that's hard to find in a system as volatile as Bitcoin.
But people who support the Bitcoin standard say it would eventually lead to more stability.
Right. Their argument is that as more people use Bitcoin and the market matures, the volatility will decrease.
But that's the big if.
It is. There's no guarantee that will happen.
It's like asking us to trust that everything will work out in the end.
And for a lot of people, that's a risky bet, especially when you look at the history of financial crises and market bubbles.
It's interesting how both the gold standard and the Bitcoin standard try to address this desire for stability.
Yeah, they both appeal to this idea that we need something solid to base our economy on.
But they both come with their own set of risks and uncertainties.
Exactly. And it's important to remember that we're not just talking about theories here.
These are real choices with real consequences.
Absolutely. They would affect everyone.
Okay, so beyond the volatility issue, what else is different about how interest rates would work under these two systems?
Well, one big difference is the role of decentralized lending platforms.
We talked about those a little bit before. Can you explain how they would actually work in a Bitcoin standard world?
Sure. Basically, they would connect borrowers and lenders directly without going through a traditional bank.
Kind of like peer-to-peer lending.
Exactly.
Yeah.
But on a global scale and using blockchain technology,
So instead of going to a bank, I could go to one of these platforms and find someone who's willing to lend me Bitcoin.
exactly. And you'd agree on the interest rate between yourselves based on things like your credit history, how long you need the loan for, and what's happening in the market overall.
That sounds pretty efficient. You cut out all the middlemen and the fees.
That's the idea.
Hmm.
But of course, there are also risks.
Like, how do you know the person lending you the Bitcoin is legitimate?
That's where the blockchain comes in. These platforms would use smart contracts to manage the whole process.
What are smart contracts?
They're basically self-executing agreements that are coded into the blockchain. So once you agree to the terms of the loan, the smart contract automatically handles everything.
So it's like a digital escrow agent.
Exactly. It ensures that both sides follow through on their commitments.
That's pretty cool. But what about regulation? It seems like these platforms could be vulnerable to fraud if there's no one overseeing them.
That's a valid concern. And it's one of the biggest challenges for the whole decentralized finance movement.
Because right now, there aren't really any clear rules for how these platforms should operate.
Exactly. And that makes some people nervous. They worry that without proper oversight, it'll be too easy for criminals to take advantage of the system.
But people who support decentralized finance say the blockchain itself provides enough transparency and security.
Right. The idea is that because all transactions are recorded on the blockchain, it would actually be harder to get away with fraud.
That's a tough call. I can see both sides of the argument.
And it's all still very new. This whole space is evolving so rapidly. It's hard to say for sure what the future holds.
It's definitely a lot to wrap your head around. We've covered a lot of ground today, from the gold standard to decentralized lending platforms.
And it's all connected. To understand how interest rates would work in these different systems, we have to think about stability, volatility technology, the role of government.
It's about way more than just numbers.
Exactly. It's about our values, our priorities, what kind of financial world we want to live in.
And those are choices that affect all of us. Okay, I think this is a good place to take a break. We've explored some pretty complex ideas. When we come back, I'd love to talk about what all this means for people, businesses, the global economy. There's still so much to discuss. You know, it's interesting. We've been talking about the mechanics of these systems,
Right.
but they also represent very different philosophies about money.
Absolutely.
Yeah.
Almost like two different visions of the future.
Yeah.
One looking back,
Yeah.
one looking forward.
Like you asked me earlier which system I'd rather live under.
Right.
And honestly, I'm still thinking about it. The gold standard has a certain appeal.
Yeah.
It just seems so solid,
Yeah.
you know, like a return to a simpler time.
Yeah, gold has always had this kind of mystical quality to it. It's
Yeah.
tangible, it's scarce. It represents this idea of lasting value.
Which is appealing in a world that feels so uncertain right now.
Oh, exactly. People are looking for something they can trust, something that won't lose its value overnight.
But then I think about those historical examples where the gold standard actually hindered growth, and the fact that central banks wouldn't be able to respond to crises.
It's a trade-off, stability versus flexibility.
Exactly. So then I think about Bitcoin, and it feels so bold, so revolutionary.
Yeah.
This idea of a decentralized currency free from government control. It's exciting.
It's definitely a radical departure from what we're used to.
But that volatility scares me. We talked about how unpredictable interest rates could be.
Yeah, that's a major concern.
How could people plan for the future? How could businesses operate?
Those are legitimate questions, and they go to the heart of the debate about Bitcoin.
Because it's all based on the assumption that the volatility will eventually go away.
Right, that as more people use Bitcoin, the market will stabilize.
But that's a big assumption.
It is. And it's one that a lot of people aren't comfortable making.
I mean, we're so used to relying on banks and governments to manage our money.
Right, to provide some level of security and stability.
It's hard to imagine just letting go of all that.
It would require a huge shift in mindset and a lot of trust in this new technology.
I think what this all boils down to is that we need to be more informed about money.
Absolutely. Whether we end up with the gold standard, the Bitcoin standard, or something else entirely.
We need to understand the risks and the potential consequences.
Yeah, we need to be financially literate. We need to be able to make informed decisions.
So for our listener who asked about interest rates,
Right.
what's the takeaway here?
I think the key is understanding that interest rates aren't just numbers.
They're a reflection of much bigger forces at play.
Exactly. Supply and demand, risk, stability, volatility.
And those forces would play out differently under each system.
Absolutely. Under a gold standard, we might see higher but more stable rates.
Because of the limited supply of gold.
Exactly. And under a Bitcoin standard, we could see wild swings as the price of Bitcoin fluctuates.
So there's no easy answer.
No. And ultimately, any decision about borrowing, lending, investing,
It always involves some level of risk.
always, yeah.
This whole deep dive has really made me think about money in a new way. It's not just something I use to buy things. It's a system with a history and a future.
And it's a system that's constantly changing. Who knows what the future holds?
New currencies, new technologies, new ways of thinking about value.
Exactly. It's an exciting time to be alive.
And I hope our listener feels more equipped to navigate this evolving landscape.
I hope so too.
We've only scratched the surface here.
We have.
So keep learning, keep exploring, keep asking questions. That's how we create a better financial future for everyone.
Absolutely.
And that's it for this deep dive. We'll be back next time with another fascinating topic.
See you then.